Welcome to the Best of U.S. Investors, two regular guys show. This is Mark over here, and I'm Trent. And today we're going to hit on some economic news. It's a slow week because it's Thanksgiving week. We're also going to hit on a couple of companies that have shown some volatility or potential stress or upside. So we're going to get into that and whatever else we decide to talk about. So let's get going. Hey,
Hello,
Mark.
happy Thanksgiving week. How are you doing?
I'm good. This is the week
Okay.
where family comes in town and you eat too much and maybe say things you shouldn't say because you're
And
influenced by a beverage. Yeah, it's always
it
entertaining.
it should be quite a Thanksgiving across the country considering the election results, depending on which household you live in.
Yeah.
So
Yeah.
anyway, it could
Yeah,
be interesting.
it could be. I think I
Uh,
think I think my experience with that will be just pretty much one-sided. So,
yeah, yeah,
yeah, there's no swaying another way. There's nobody
yeah.
on the other side. So
Okay.
we'll see.
Well, it's well, happy Thanksgiving, everyone. I can't believe it's the 26th of November. Okay, and it's about 11:30 when we made this, 11:30 Central. And a month from yesterday's Christmas. I can't believe we're almost into December,
That's insane.
already. It's pretty amazing.
Yeah,
But anyway, we have a shortened trading week this week, and uh, uh, U.S. stock markets will be closed on Thursday in observance of the Thanksgiving holiday. And the stock markets will close early on Black Friday, with trading ending at 1 p.m. Eastern time. So we were just talking before we got on, video that, when I worked in the business, there might be people in the office Monday and Tuesday today, but tomorrow it might be half full, Thursday nothing, and then Friday a skeleton crew. So a lot of the traders, the big guys, hedge funds, they're off in the Hamptons or wherever rich people go, down to Florida where you are, to,
yeah,
and so it's more like an exhibition game, where it's beginning of the season and you're playing somebody that's worse than you and you only play 5 innings instead of nine and you don't really play that hard, and you don't care who wins. And that's what these weeks are like for me. And your trading plan, just like your game plan in a football game is made up to beat your opponent, and play four full quarters at full speed trying to win. And this week is just like, it's like a spring game. Okay, so we had a few trades this week, but I didn't expect much, but we made some cash out of it, and we'll get out and enjoy our weekend and start back up next week. But that's what you're seeing, lower volumes, and just not everyone's here. Not everyone's participating today, or this whole week. So
yeah.
don't get too don't get too involved in this week, from my point of view. And a lot of people, you got to get that in your mind, and until you do, and you can probably mess up a little bit on your trading plan. So
Yeah.
anyway, let's talk about Thanksgiving a little bit. And since it's a holiday, get off a little bit. As we get closer uh, to Thanksgiving, the cost of the Thanksgiving dinner uh, is actually more affordable than it's been in a year, but the dinner is still more expensive than it was before the pandemic. The American Farm Bureau Foundation's 39th annual Thanksgiving dinner survey provides a snapshot of the average cost of this year's holiday meal for 10. Okay, they do this every year for 39 years. They use the same food, all that. So this year, the holiday meal for 10 is about 58.08, or about 580 per person, and that's 5% lower than last year, but it's still above the pre-pandemic prices. So among the reasons, the Farm Bureau says, except in the West, like California, the West Coast, where it's actually higher, uh, they're generally seeing more affordable Thanksgiving dinner due to a decrease in demand for turkey that's caused prices to fall for turkey, according to the Federation. Despite this momentum, the Thanksgiving meal is still 19% higher than it was in 2019. So again, we're seeing that 20% inflation that we see, across the board, that we talk
Right.
about almost every week. And that highlights the impact of inflation has had on food prices and farmers' costs since the pandemic. So I don't go and buy all that stuff. Jan does, but I hear her complain about it. So I don't know if you have to do any of that purchasing, or you have to hear the complaining about it.
Well, I'll tell you this. I have been to the grocery store 3 times in 24 hours.
Wow.
Yeah, yeah, and it doesn't get any cheaper each time I go. I walked out today because we're going, so friends are doing a big event, and we make these muffaladas because ginger's from New Orleans. They're excellent. They're just delicious, right? You know, three meats, two cheeses, bread, olive dressing. Holy crap. I mean, it doesn't get cheaper. It just every year it doesn't get cheaper. So,
Yep.
yeah. And I'm
So
like, and
again,
we haven't even done grocery shopping for Thanksgiving yet. So I'm like, oh God.
man,
We
Thanksgiving's
need
like
more
in 2 days.
subscribers. Come on.
You got tomorrow. You got tonight, tomorrow to get that done.
Oh, that's right. Today's Tuesday, huh?
Yeah. So luckily we
Yeah,
don't. We just go to we have two Thanksgivings. We got to go to one Thursday and one Friday. So all we have to do is bring a side. So that's our
that helps out.
that's our extent on Thanksgiving. So we lucked out.
Yeah.
So last week, Bitcoin is and crypto has been red hot since Donald Trump was reelected into the White House, and it touched a fresh record high last Friday with its sights set firmly on the $100,000 barrier. Okay, and it was sparked by expectations of a more friendly regulatory environment.
Regulatory.
And what's that?
I didn't say anything.
Oh, uh, under Donald Trump's administration, has more than doubled in value this year. And it's up about 45% since Trump's election victory on November 5th, which also seen a slew of pro crypto lawmakers being elected to Congress. But the rally this week has appeared to stall along with the rest of the market, just short of 100,000, likely due to a sheer number of put options traders hold just below that level. You can go into, if you have a Coinbase account, you can go in and see the wall of sells and the wall of buys on either side. And when the wall of
Yep.
sells right at 100,000, you're seeing a lot of people, trying to get out at that 100,000. And again, options just started trading on the IBITs and things. So there's a
Yeah.
lot of stuff happening. But I just looked a little while ago and it dipped down to 91. That's back up to about 94. So you can expect after going up so much of a percent in any equity or uh, any asset class that you're probably going to see a pullback, and that's what we're seeing. When you look at, we talk about MicroStrategy again, MicroStrategy's whole purpose under Michael Saylor is to buy Bitcoins. And on Monday, they purchased 55,500 Bitcoins for $5.4 billion in cash at an average price of 97,862 per Bitcoin. And that was between November 18th and November 24th. So as of November 24th, MicroStrategy owns 386,700 Bitcoins with the total purchase price of 2.9 or 21.9 billion and an average price of 56,761 a piece. So their cost basis is 56,700. Right now, Bitcoin is at 94,000. So they're up 40 some thousand per Bitcoin times
300.
386,700. Okay. So again, you're going to see, if you're into crypto, you're going to see some price swings. Okay. It's not unusual for Bitcoin to drop in value 10 to 20% at a time and then zip back up. It's a newer asset class, starting to get more stable with options, it's starting to get more stable with ETFs. But again, it's been in the news and that's why we talk about it. Other things we're talking about, is with Donald Trump uh, in in power here in a couple of months. He's very pro crypto, and he said at the Bitcoin conference in Nashville last fall that they were going to start a reserve for Bitcoins, a national reserve treasury essay to buy Bitcoin. There's also a bill in the Senate to buy 1 million Bitcoins over the next 4 years, okay, which would increase the value of Bitcoin allegedly because there's only 19 million that have been mined so far, and another million and a half to be mined. Okay, so that is also have other countries like El Salvador uh, has a Bitcoin society, based society. They accept Bitcoin. we've seen 7 states, including Pennsylvania, have legislation going through that they could put reserves, Bitcoin in their state reserves. Um, Michael Saylor's flying out to Redmond, Washington, to talk to the board of Microsoft for their request to talk about putting Bitcoin in their reserves. You have all these companies, especially the Mag 7, that have all this cash. And this cash is sitting in treasuries, just like they were
Yeah.
at MicroStrategy. And I think that Michael Saylor, in his experiment from 4 or 5 years of using Bitcoin in his treasury, has got some people to notice it. If Microsoft would start doing it, I mean, Tesla already does it.
Yeah.
Square already does it. If Microsoft starts doing it, you would think that Apple, Google, Facebook, all those guys would give it a shot or look at it at least. I just saw this morning that Rumble has become the latest company to confirm plans to add Bitcoin to its balance sheet. Uh, Rumble's a social media company that competes with YouTube. Uh, in a November 25th statement, the video sharing platform said its board of directors approved the strategy, allocating a portion of the company's excess cash reserves to Bitcoin at the discretion of the company and up to $20 million total. So, you know, you're going to see these dips, and if you want to stick your toe into the crypto world, really go and do some studying and learn about it. Trent here, he has been a Bitcoin miner, which blows me away because that's just really cool. It's something I've never done. Uh, and so there's so much to it. I was watching and reading about Bitcoin nodes where you can actually log into the entire Bitcoin ecosystem and see the whole, what's going on. Anyone can do this for about $110, your computer, and you can buy a little drive on it. It's pretty amazing. So
Yeah. It's
go ahead. Go
it
ahead.
it's also it can be a second source of income, you know, um, minus out the expense of running a machine and all that with the energy and all that. If you're mining through the low end of the curve when it comes to Bitcoin, you accumulate and then you have these rocket hires, or what you say, the banana move that Raw Paul talks about. I would suspect if you mine enough of it, you can pay some stuff off or pay for a year's worth of electricity, or honestly, I my electric bill is not due until October of 2025 because I've paid into that using you know, uh, uh, crypto that I've mined to pay that forward. So all of a sudden I'm moving, the stick when it comes to my expenses in a sense. And so it can be, and you can do it at home. It's just, get on YouTube and learn about it,
Yep.
So a lot of people do it. And now with crypto becoming a bigger part of the economic infrastructure, potentially, I suspect you'll see more opportunities in it when it comes to the mining side of it.
Well,
So,
even that, for income, they have what's called staking, where you stake your crypto, and it's like Ethereum or Cardano, and there's just a whole bunch of them that if you have a Coinbase account, you have that particular crypto in your account, and you allow them to stake it, you'll see it's not like monthly; it's like every other day you see some money coming back into your account. Have you ever
yeah,
staked before?
I have not because I've used it as income over the years, but I know people have. I sometimes, I've heard mixed messages about it, you know, in that getting access back to that crypto that you've staked has been a challenge in some cases. Some of it's not legit, so you got to really figure that out. Who's legit. And so I think those I have not done that, but that is one way to generate additional income as well. And now with iBit, I suspect you'll see with them becoming options becoming available on iBit, you're going to see somebody start writing covered calls on iBit to generate income, and that could be another source in the future. And we've seen that
Yeah,
with Tesla and Nvidia and a couple others. You've spoken about that in the past as well. So
yeah. YieldMax has their products of ETFs that pays out monthly on on Nvidia, on MicroStrategy, on Coinbase, just about ExxonMobil. You can go to their website understand what that ETF is not financial advice, but these are some products that will provide you income, and again, understand the prospectus, understand the risk involved with those. But there's a lot of products coming out, around not only crypto, but around regular equities too. So there's a
Yeah.
huge world out there, for income.
Years ago, when I was a financial advisor, there was a lot of talk about pension funds not being able to meet that obligation of roughly 7% distribution rate on average. And so they moved their book from a very conservative book of bonds and high yield stocks and dividend paying stuff like that to more private equity, more risky asset classes. And now I think what you're going to see more and more, and especially with income being one of those things you got to have, as in a retirement, you're thinking about income sources in a different way. Yield max is a prime example. Using option strategies, you're seeing more option influence on the market, and that's if used right, it can be an income generator for a lot of people. And I think the financial advisory industry is probably being pushed in the sense of keeping up with inflation, which is ridiculous, a devaluation of the dollar, but also just how do I keep up with these people's living expenses when I have a market that could be flat or down in a given year, you know?
Yeah, I was like, with treasury yields coming down, people are going to start going out and look, on the risk curve a little higher, and to find that yield. And Michael Saylor was talking about, they were talking about Warren Buffett, and he has $325 billion in cash, which is sitting in treasuries. And Michael Saylor figured it out that he's losing about, I don't know if it's $6 billion a month or a year, by having treasury bills. It's not keeping up with inflation and the purchasing, declining purchasing power of the
Yeah.
dollar. So, and I think that's why he's heading out to Redmond, because of that.
You know, I've
So
I've
anyway,
I always I've always
go ahead.
wondered just I've always wondered if you're a company and you have your money sitting in the savings account or treasuries, why isn't that money being managed in a different way? Is it just because of the risk element, or is it, which I think is a lot of it, but when you start to do the math, like Michael Saylor pointed out with Warren Buffett, all of a sudden you're like, wait a second, I've got to manage this money better, or it's not, my dollar's not worth a dollar, and I'm not going to be able to have that reserve there to outpace whatever expense is going to come up that I'm going to need it for. So I think it's very interesting to see these companies and states and countries to start adapting a different attitude towards their reserves, and how to manage them. So
Yeah,
I think it's
I mean,
it put go
I think
ahead.
over the last 100 years, what the dollar's lost 99% of its value. Which is why years ago you could buy a little piece of chocolate for a penny. And now
Yeah,
it's a Hershey bar cost. I don't know. I don't buy them, but it's not a penny. I can tell you that. So
two
you know,
something.
and anyway, that's the way our system is built. It's a debt-based system, and you need people to take out loans and repay those loans for our system to grow. And I think that they're going to find that when the new administration goes in and looks at what the Treasury Department has done by borrowing short-term Treasury bills to continue to print money and pay off other treasuries that have come due, also increasing our national debt, to over $36 trillion. That they're going to have to unwind some of that and figure out something different, because normally you would put your debt into longer term, 30 years or 20 years or 10 years or something, to get a better interest rate. But they were going to the short terms when the yield curve is inverted. And by the way, I think it inverted yesterday again, meaning that the short term debt is yielding higher than the long term debt, which is not what you want.
Right. That's not good.
Yeah, did it revert? I think it did.
I have it at 0.06.
Okay,
So
it's right on the line.
oh no, you
So
said reinverted.
Yeah,
Okay,
reinverted.
not
Yeah,
not
yeah,
inverted. Yes, you're
yeah,
correct. It went from point zero 0.04 to point zero 0.06.
yeah,
So yeah, it's moving higher.
yeah.
Yeah.
Anyway, I think we beat crypto to death, and we'll move on. I want to talk a little bit about Amazon because you and I were talking before we started filming about uh, is the not the crypto is the AI movement similar to where we were in 2000 with the internet bubble, the dot-com
Yeah.
bubble, and Amazon came out and admitted they're working on creating their own AI chips to reduce its reliance on NVIDIA's high-priced processors. Amazon executives explained that AI chips were already 40% cheaper to run when generating responses from the AI models. They reported that they expect about 75 billion in capital spending in 2024, with the majority of that technology infrastructure. Chief Executive Andy Jassy said he expected the company to spend even more in 2025. Dave Brown, Vice President of Compute and Networking Services, AWS, said the price of cloud computing tends to be much larger when it comes to machine learning and AI. He added, when you save 40% of $1,000, it's not really going to affect your choice. But when you're saving 40% on tens of millions of dollars, it does. So you're starting to see these customers with their money going out and trying to build their own chips, okay, which you're seeing in the financials of NVIDIA, where their revenues, although impressive, are coming down quarter to
Yeah.
quarter.
What was it? Quarter to quarter on a year to year over base or quarterly on a year over year basis. It went from second quarter 112% increase to this third quarter 94% increase. So a very and that has been a continuous drop for what 4 quarters now. So it is
Yeah,
their revenues are slowing year over year.
yep.
And that's something I think to pay some attention to in a big way.
So we're starting to see it, kind of in the prices of some of the Mag sevens, have slowed down quite a bit, you know, and we'll see what happens. We're coming into December. I think today is the first day of the Santa Claus effect, supposedly, which the people are out in the holiday spirit, free spending the whatever remaining on their credit cards, and
Yeah.
loading up on what's the card called? Oh, buy now, pay later. So people are going to load up, and then they'll have to pay it off. And a couple of weeks ago, I read a report that said how many, I forget the percentage. It was a pretty high percent of people who are still paying off their credit card from last Christmas. Okay, so you know, make something for somebody. Give them a gift card. Do something. You don't have to go out and be elaborate if you can't afford it. And don't put yourself out in higher credit risk. Just because it's Christmas. That's common sense, but not financial advice. But I certainly don't go out and overindulge on Christmas. And put myself in debt. I would rather put that money in an investment and let it grow. That's
Yeah.
that's me. You know.
And I think it's, I don't, I doubt my parents grew up with a big, full tree of Christmas presents every year. You got one or two, maybe three kind of thing, and it was about being around family. But we have become this, society of stuff. And I often say you'd be better off giving the little kid a box versus what's in the box.
Yeah.
You know,
Well, I mean, there was
but
an old saying back in my day, know the reason for the season, and that was,
yeah,
it's not about, all the Christmas gifts and all of that. And, so anyway, I'm not lecturing. I'm just saying, don't put yourself in further debt, for Christmas. Do something nice for someone, say, look, I'm going to give you a certificate. I'm going to go mow your yard twice next year or whatever,
right.
that you can do. You show appreciation. And it's actually a better gift than going out and buying something that's going to sit in someone's attic or garage, that they don't use, or they
Yeah,
regift it, and hopefully they don't forget you gave it to them and they give it back to you.
right.
Never a good thing. So,
No.
I'm going to go on a little bit more on the AI, and we talked a little bit last week, but probably not on this channel about SMCI. SMCI had some accounting issues. They lost their auditor. Okay, and now they've regained an auditor, although it's kind of a an iffy auditor, based on its background. But even SMCI, because of what's happening, is forcing their customers to look elsewhere for suppliers. And XAI, which is Elon Musk AR startup, has shifted all AI server orders from a Supermicro to Dell, and that's reported by UDN.com. Dell is already among the largest makers of servers and will benefit from this decision, just like its suppliers Inventec and Wistrom. So as you're watching, the price of SMCI go back up, and I think a lot of it is psychology of, oh, this is a great company, and it used to be sky high, and they got an auditor now. Not everything is probably hunky dory at SMCI right now. These things take
Right.
time to go through, and if you're already losing customers like Elon Musk, XAI, I would have to imagine that other customers are doing the same type of thing. So I don't know that for a fact, but I used to work in procurement on an OEM computer company, and that's what
Hmm.
I would be doing. Okay. So
Yeah. I think it's just when you see an accounting issue, I think that should just be a red flag. That should be, that's the red flag that Enron should have been waving to everybody. What
that's a crashed and burned.
MCI,
Yeah. WorldCom.
MCI
Yeah.
Telecom, WorldCom.
It's WorldCom. Yeah.
When they can't report their quarterly or annual earnings because there's an accounting issue, and then worst case scenario is your accountants leave. That's There's headwinds ahead.
Yep.
Absolutely.
And this week, Macy's even came out and they delayed their reporting because some employee miss or didn't report millions of dollars worth of expenses. They were in the small shipping department or whatever, and so now
Oh, wow.
Macy's has to go back and figure that out. So I don't know. The employee is no longer with them according to reports, and I don't know if there was any criminal activity or anything. But you know,
Yeah.
just seems like all of a sudden everyone's kind of losing focus on their financials, and you know, I don't know.
Doesn't
I
it
don't know
remind
why.
you of a period of time in about
Yeah,
24, 25 years ago?
yeah. I mean, it
Or
does.
even what 16 years ago?
Yeah.
Uh you know.
No,
Um I
it's you know, watch history because history repeats itself, and that's what we're seeing.
Yeah.
Well, with Donald Trump's election and the red wave, there's been a lot of optimism. They called it the Trump bump, and in the stock market, and that's really good. And you're seeing it like level out a little bit. He's got his cabinet all picked, and yesterday the markets went up because of his Treasury Secretary nominee is people seem to like him, the market seem to like him. But just remember, there's a lot out there that they haven't even got to office yet that they need to address, and one of it is manufacturing. Okay, we've had
Mhm.
several manufacturing reports come out. The Dallas, Texas Manufacturing Activity Index came out at negative 2.7 in November, and that was from negative 3 in October. So basically, it was the same. Negatives mean we're in contraction. Uh, this marked the smallest contraction since negative readings began in May of 2022. Okay, we're in 2024, almost 2025. Contractions have been going on that long in Texas. The production
Wow.
index dropped sharply to near zero from 14.6. That's a huge drop. The new orders index slid further to negative 11.9, indicating weak demand. The Kansas City Fed manufacturing production index fell to negative 4 in November, and that's down to zero in the previous month. The volume of new orders declined further into negative territory, registering negative 9, while backlogs remained unchanged at negative 14. Additionally, the number of employees index rebounded to 1 from negative 2, so basically flat in October, but the average employee work index dropped to negative 9. So they're not, that says it's not laying off, but if you're working there, you're not working as many hours. So that's where they're saving on labor. Year over year, the composite index for factory activity fell further from negative 18 from negative 14. And a good friend of mine owns a big metal fabrication shop, and I just talked to him last week. And he says, yeah, he says, it's been rough, and we're trying to hold on to our good people. And he says, and I've got some orders maybe coming up. And if I do, then I've got to go find the people I laid off. He says, and see if they'll come back. He says, if that does happen, he says, it hasn't happened yet, but that's what I'm working for. And we'll see what happens. Him and his partner have not or are not taking salaries now for the next year. He told me it was 3 months, but now it's the next year. So
Wow.
that's just in the manufacturing world. The Philadelphia factory activity manufacturing index declined to negative 5.5 in November, and That was from 10.3. Remember last year or last month, Philadelphia went from negative to 10.3. Everything was good. And it was well before below the forecast of 8. It's the second negative reading since January, and a sign of manufacturing activity in the region softened overall. The U.S. Fifth District Composite Manufacturing Index was unchanged at negative 14 in November, same as October, and compared to the forecast of negative 10. Readings show that activity remained sluggish in November, though more businesses were optimistic conditions would improve over the next 6 months. And you've seen that a lot of people are saying, okay, we got a new administration in. I'm optimistic that things are going to get better. And we'll see.
Yeah.
That's a lot to put on a 6 month period, and when there's so much that needs to be turned around to make this work.
Yeah.
Um, what else we got? Well, that's manufacturing. Now, services are a little better. Services have been doing better, but the real money and the real economy is in manufacturing. And you're hearing about tariffs out there, and media is trying to say, oh, this is going to cause inflation and blah blah blah. Most of the stuff, and we've had 4 years of this administration before, so we know that tariffs are used as a lever to get countries to move in your direction. They don't
Hmm.
necessarily put them in place, but it stops it. Just the threat of tariffs, can stop a country from a certain, we're the largest market in the world. We
Right.
do have some power there. And so don't get all tied up about, oh, the tariffs are going to cause inflation. You know what? We've already got inflation. What caused inflation? The federal Treasury Department, the Federal Reserve printing so much money and throwing it into our economy. That's what caused inflation. We have inflation. Okay, so if you're worried about
Right.
inflation, you should be worried about today. Okay. Anyway, that's my rant on that. Anything on
Yeah,
that?
no, I think it's a combination, to have tariffs is one thing to, implement that as well. But yeah, and that would cause inflation. But if you can lower the cost, the operating costs and expenses of the country, it starts to even out, and if it starts to level out. And I think that's the encouraging thing about what they're proposing is cutting costs, ridiculous costs that we spend for, government spends for a toilet seat or hammers or that kind of thing. It's been a system of, keeping your buddy, you know, you pat my back, I'll pat your back kind of thing. And I think it's encouraging to hear that. So I think that, like you said, tariffs are a negotiating tool, and I people don't think that deeply about that kind of thing. They just think, oh, the cost of this product's going to go higher. Not necessarily. So I'm encouraged to see what they come up with and what they can implement and do. So honestly, it's the best plan I've heard in a long time, you know.
Yeah.
So it's
I
encouraging.
heard last week that the Department of Defense can account for $842 billion. Okay, $842 billion, and no one's raising their hands. That's not a big story. That's our
Yeah,
tax money. Two regular guys, two regular gals, whoever. That's American
yeah,
citizens' tax money that we're blowing. And we've got studies that Rand Paul has shown that, is it tequila or vodka that stimulates the flat iron fish, more. $100,000 for that. It goes on and on. The money we waste that we could be taking our veterans off the street, that we could be helping people get into housing, that we could give back to the taxpayers, and let us
right.
spend money the way we see fit, you know, uh, amazing, so
Yeah. Well,
I'm
you think
looking
of it.
forward to this Doge program, and to see what Elon and Vivek come up with, just because they're finally looking after, government has been on this roll for so long unchecked. And now we'll see if we get a little accountability, which is all we could ask. If any company you run or you work for does the same thing, okay,
Yeah,
amazing. So
yeah,
I'm looking forward to
great.
that too.
Yeah, I think it's I had a thought, but I lost it. I don't. I
Well,
look at it. Yeah. Wow. Um, no, I think it is one of those things that I'm encouraged by it. I think we could see some change within the next 24 months. I'm not looking at the next 6 months. I'm like, there's a lot of this is a heavy boulder to push.
uphill
Um,
in the mud.
but oh, the one thing I was thinking about was if if you have more money in your pocket, so let's say they go to a flat tax, federal tax, or to a no federal tax, you have more money in your pocket. And let's say they say sales tax goes from what here in where I live is about 9.5%. It goes to 15, right? But I don't have a federal tax being taken out of my income, right? I'm going to most likely spend more money, and that's going to go back into the economy. Which, if more stuff is manufactured in the United States, that cycles through the U.S. economy more and more. And so, I think I look at these ideas that they're putting out there, and right now, to me, they're ideas. When I see pen to paper, that's when I'll get super excited about it. But I really think the American people need to look at it and go, if I have, if I'm paying, 25% in federal taxes each year, I can gain back, say 10 per, go from 25 to 15 or 25 to 10, that 15% then goes back into the economy because I'm going to invest it or I'm going to put it or I'm going to buy stuff with it, which would then increase our GDP and bump this economy. So um, yeah, I don't know. I think it's stuff this has been a long time coming. As long as this does actually happen. So,
Yeah, we'll see. I mean, it's
yeah,
better than sitting and doing the same thing all over again, like Einstein said, and expecting different results, you know.
right.
So,
Yeah,
and that's the definition of insanity. So,
right.
it's going to be interesting to see how that goes. But at least someone's talking about it, talking about spending cuts instead of just revenue increases. Revenue increases means our taxes are going up. Spending cuts
Right.
mean you go out and you cut all the crap out that we don't need, that government doesn't need to be involved in, that we can do on our own. We can understand how to do stuff. And we don't need Big Brother looking after us every single day. It's just my
Right.
opinion. All right, so let's move on to another sector that's not doing as well, and that's housing. Okay, so we got uh, basically manufacturing, housing starting to slip. Sales of new single family homes in the United States plummeted by 17.3% from previous month to seasonally adjusted annualized rate of 610,000 October of 2024, marking the sharpest decline since 2013 to the lowest level since 2022 and firmly below market expectations of 730,000 annualized sales. The median price of new houses was $437,300. That's $11,000 above the value from the previous month. So prices aren't coming down, but the sales are coming down. Okay, so
Yeah.
something's got to break in the housing market, because if we aren't selling houses and we're not selling existing houses or new houses because they're too expensive, then we're not selling carpet, we're not selling shingles, we're not selling paint, we're not selling appliances. The whole chain of that industry starts to slow down, and then I'm Lowe's or Home Depot, and then I'm not selling as much, all that, and it just rolls through the economy. So just another thing that we need to address. That we're all happy with the Trump bump, but there's things to be worked on.
Yeah, absolutely. And actually we did have a house sell in our neighborhood.
Oh
We had
boy,
been
did
on
it!
the market for a year.
Wow,
Yeah.
they
And
probably
that
just gave
is,
up and said, "I got to get out from under this." Did they
yeah,
lower the price?
yeah, of course. Absolutely.
Yep.
I was talking to a friend of mine. He sold his house, ran into him at the grocery store yesterday. And I was like, "Oh, did you get what you wanted for it?" He goes, he's sort of him and hawed. I was like, "Did you make any money?" He goes, "Yeah, but not what we were thinking I'd make." And I'm like, "You're in the mortgage industry, dude. You
Yeah.
should have known. You
Yep.
should have just held out."
Yep.
But you know, life changes, so they have to do
Yep.
stuff.
Yeah. Luckily, you got out with something,
Yeah,
instead of being underwater, which a lot of people
yeah,
could be.
yeah.
The other two areas that I won't go into detail on, but auto industry's in the dumps right now, especially in Europe. If you work for Volkswagen, you might not be working there anymore. You got Stellantis here, Ford, GM, all looking to lay people off. Okay,
Yeah.
the industry is just not doing so well. We've got the potential strike coming back up, in the longshoremen's. That's January 15th coming up. And then I think what's going to be interesting at the beginning of December is the non-farm payroll comes out. If you remember last month, we came up, I think it was 100 or 12,000 jobs or something was all. And
Yeah.
the month before was revised down. I'm seeing if that jobs report gets revised down into a negative number, and if we start seeing that now that the election's over. So that'll be really interesting to watch. And if the jobs report starts showing that, then I'm going to go back and talk about stagflation because we're seeing inflation rise, jobs coming down. Okay, and that would not be good for the economy if we ran into that. So
Yeah.
anyway, that's my economics report for the day. And I found something else interesting. Remember when the Fed cut rates, back 50 basis points? Okay, it was that September, and that was supposed to take care of, all the mortgage rates were going to come down and credit card rates are going to come down, and none of that happened. In fact, Treasury yields, the 10-year went up, everything went up, mortgages went up, credit cards went up. Well, it was interesting, but before that happened, dozens of the largest U.S. retailers and their bank partners jacked up interest rates on their store branded cards to record highs in the months before the Federal Reserve began cutting rates as companies looked to pad profits during a stretch of sluggish sales. At least 50 companies, including Big Lots, who went bankrupt, Gap, Petco, Burlington, Macy's, and TJX companies, increased the APRs in their credit cards between September 2023 and September 2024, according to a review of data gathered by Bankrate.com that examined the nation's 100 largest retailers. Big Lots, Academy Sports, Burlington, Michaels, and Petco are tied for having the highest APR among companies Bankrate tracked at a staggering 35.99% as of September. Holy crap. The average
Wow.
interest rate on store card is an all-time high just ahead of the holiday shopping season, which is when most consumers sign up for store cards. Credit card debt has reached new highs and delinquencies have hit uh, levels not seen since 2011. So be careful out there. Watch what those rates are. Try to pay your cards off, monthly. So you
Yeah.
don't 36%. Okay, think about that.
Isn't there? I thought there was a law that restricted people credit cards charging interest rates like over a certain percentage rate.
I guess not.
Oh my gosh.
Yeah, I mean,
36% annual?
it, you know, not only do you have inflation to worry about eating into your dollar, you've got purchasing power going down, and now you've got increased interest rates on your credit. And then look at how many credit cards are maxed out or credits are at high level highs credits, and our
Hmm.
delinquencies are starting to go up. Okay,
Well, at
so just look
36%
ahead.
interest rate.
Yeah, I mean, put this all together, and think about it. And are things as rosy as we've been told? I don't think so. I
Yeah.
mean, it looks like it, but as long as you can still borrow, and not go delinquent, I guess you're okay. But again, be careful this holiday season. Be a little more, frugal. Try to save
Yeah.
yourself some money and some pain going into next year and the year after.
Yeah.
That's all. That's
Yeah.
all I got. That's all I got. Happy Thanksgiving, there.
Right. Well, and I think this is, a season for change. We're seeing it from a governmental standpoint or potentially. Um, I think we're going to see a season of up up markets for the next month and then a leveling off in reality check going into probably the second quarter of this year. So, and you're seeing it in corporate earnings growth year over year, earnings and revenue and debt and all this. Um, but also I think it's a, opportunity to change how you think about creating wealth. And part of creating wealth is reducing your expenses, and so we're seeing our own government, hopefully, they implement this and it happens. Looking at, instead of raising taxes and tax rates, or they're looking to reduce the expenses of our government. And in the end, that's a healthy thing because that eventually comes back to you and I, two regular guys. And the regular gals of the world is that, or the United States is, if I have more money in my pocket at the end of when I get my check, I'm more likely going to pay down debt, get more financially healthy, hopefully. And with that freedom, financial freedom, I'm going to go out and implement, possibly upgrade certain aspects of my life, which increases GDP. So it is, I think, a season of change. And I think if we looked at it that way and we looked at the positives and we will learn to better risk manage our personal wealth along with our government wealth, I think will kick some ass down the road. So,
Well, that's why we have best of us investors. Is we focus on the fundamentals on one side and the technicals on the other side. Uh,
yeah,
and we say on the technical side, the first rule of making money is not losing money. So we teach how to use the technicals to help you know when to get in and out of a position. Okay, what are the institutions looking at to give you a fighting chance? If you want to be more long term, we have the fundamentals that you can utilize technicals to say, I don't want to get in at the high, even though the fundamentals say that this stock is good. You know, when the tide goes out, all boats are lowered, including the good stocks. And that might be the
yeah,
time when you find a good stock with good fundamentals with the technicals involved that you get into that and your cost basis is much lower. And you spend your time watching your digits go up instead of starting from a hole
really.
and trying to get back to zero.
Right. Exactly. And I think that's, the mission of Best of US Investors is educate on how to look for fundamentally strong and growing companies. Then second, how to risk manage it using technical analysis and my side of things, mathematics. How to best preserve your bucket of money. Um, so yeah, so with that said, check us out if you're not a subscriber at bestofusinvestors.com. You can go to the service tab and you can see the different services we have there, everything from free to $9.95 a month to $60 a month, which is the full package, which Mark is a big leader in the Platinum channel. And so this is your opportunity to start your year off on a good foot, a new understanding of how to manage your wealth and to look for good opportunities in the market and create wealth, reduce expenses, and live an incredible life. So, with that said, check us out, bestofusinvestors.com. And in the meantime, have a great Thanksgiving holiday from Mark and myself, Trent. Always have a great day and live loud. See you.
And gut. All right.
I don't know. I don't know why that
Okay.
makes me chuckle every time.
Okay.